For now, here's Myles with our chart of the day.
Now, something I know a lot of our viewers and our readers care a lot about is their tax refund. But this year has been a very goofy tax season, to say the very least. And we know that a lot of it is because withholding tables simply got screwed up after the new tax law that was passed at the end of 2017 by President Trump. Now, the result has been most people paid less in taxes in 2018 than they did the prior year. The problem is that they're not getting the same size returns they got the year before. That brings us to this chart, which comes to us from UBS, which shows the shortfall of the expected tax refund that consumers would get during the tax season. The line to focus on is this orange line here. It shows the amount less than UBS would have expected consumers to have. Right now, the shortfall is about $45 billion. So that's $45 billion of refunds that people thought they were going to be getting in terms of, checks back from the government. And economists build that into their spending model for where the economy goes in the first quarter of the year. They say people get X amount of money back from the government. They usually go out and spend that money, oftentimes on things like consumer durables. You get a new fridge, you get a new sofa. You don't really go buy a new t-shirt with it, right? You buy something big because the average refund is a couple $1,000s. Now, because people are getting smaller refunds, a lot of people think their taxes went up, but their taxes didn't actually go up. But this number has been so closely watched, and our readers have really gone crazy for this content, I think, because people really, it's hard to square that circle, right? It's hard to say, I know I paid less in taxes, but man, my refund got cut in half. Did I really pay less? I mean, you look at the W-2, you know you did, but it's a psychological thing. And one of my favorite things, of course, in economics, which is the way that people view money now versus money in the future. And netting out the benefits of a tax cut over a year just doesn't make, not that it doesn't make sense to consumers, it just doesn't feel as good.
If that number is to be believed, and the reason I said that, is this the UBS expectation, or is this people's
no, they're using Treasury data.
Okay.
So what they would have expected is the purple line.
Yeah, got it.
So the orange is where they fall short.
I think this is a really scary number, Myles, and because it's marginal discretionary money, right? And it's funny money. It is, as you say, money that you use to buy white goods or go on vacation. It's money that juices the economy, right? It doesn't stay in bank accounts, and it's gone. It's not there, and it ain't coming back. And I would think that doesn't bode well for the economy for the balance of 2019. I mean, you have to think that, right?
But it is gone, and it is spent. So did it mask what could have been a larger downturn in 2018 with consumers spending
it would have
the
been
money
worse. Okay.
that they had?
Right.
Because that's what you do. We know the savings rate has declined for the last 40 years. But could this be actually? I don't know. Maybe 2018 was better than we thought.
All I know is I recall a chart of the day where consumer spending was at 2% and consumer confidence went up and down and up and down because consumers just, they do weird things.
All right, Andy Serwer, great chart of the day. Andy, great to see you.